where's the
All right, can y'all hear me good? Just put a message in the chat if you can hear my audio good. All right.
Yeah, so clear.
All right, appreciate that. All right, so I appreciate y'all joining in, trying to get some work in and get some studying in. I know everybody trying to grow and get better at trading. It's not something easy to do, and it's not something difficult. You can make it. Sometimes we make it harder than what it is, but it do take some studying and some back testing some of the things that you're trying to accomplish in trading, having the trading plan, having the strategy, doing research. So don't get discouraged on your trading journey because it's a journey. The If I could go back, I've been trading for 11 years now, and if I could go back into time, I promise if I could have had access to something like this when I started trading initially, I probably would be an even better trader today. So you all are in the right place, in the right Discord, following Chris, his approach to trading. I think to date, I think Chris is probably the best day trader I've ever seen. And I also listen to I think only a few YouTubers, man, like Chris and then Stocks with Josh. Stocks with Josh probably one of the better swing traders I've seen in technical analysis from a bigger picture kind of perspective. And and definitely Chris probably one of the best day traders I've seen in a while. So the first thing we'll talk about right now is the EMA. And don't hesitate to unmute yourself and ask questions if you got questions, okay? So it's two pillars. There's two pillars to how I trade and how I approach the trading game.
Yeah, I'm in town now, so just
It's two ways that I approach trading. And hold on,
much tighter here. 46.8% for Donald Trump, 44.3% for Kamala Harris. The latest decision desk HQ average of polls, 2.5 percentage points separating both of those candidates. And the Harris campaign believes that coming into Nevada, they are riding the momentum. They've had a week in which they've hit states of Pennsylvania, Michigan, Wisconsin, Arizona last night. Their biggest rally to date, in which they had about 15,000 people in attendance.
Hey, somebody got their computer unmuted. Let's listen to the news. I'm trying to find you, mute you, but I couldn't find your.
Look like it's T-Devo.
Yeah, whoever it is, try to mute your thing.
Say that they felt very satisfied by how this week has been going for them. Nick.
When Nevada Democrats weigh in the 26 and 2020, what is former President Trump doing here to try and put the state in this column when they both need Nevada?
Yeah, as what we have seen from the former president is placing a big emphasis on the service industry here. You may recall those comments that former President Trump made, as so happened in Nevada as well as also at the RNC, talking about doing away with taxing on.
Can't hear you, Wolf.
Somebody's still on mute. They need to mute their volume.
For in Las Vegas,
We can't hear you, Wolf.
In order to offset Republican gains in other parts of the state, Nevada has more tipped employees per capita than any other state in the country here. So it makes a big deal here. The culinary union in Nevada, which has already come out and endorsed Kamala Harris, even said this at their meeting this week. Take a listen.
There's been some proposals out there about eliminating taxes on tips, and a lot of that is just so hot air sometimes. reverse of a lot of policies from President Trump to some actual reality.
There you go. So even though the culinary union is not supporting former
Okay, I'm
president
sorry about that. All right, so let me go into Zoom and try to. Can y'all hear me now?
Las Vegas and how it
Is somebody TV still on?
Yeah. Yeah. Somebody's TV's on.
Let me see. Hold on.
election day.
News 6's Robert Shon live 44. Is your ball game? Got each other up. Nobody got hurt. We'll just jump to war. It's the best thing that happened today. What is 17? It's followed from that line. We're back to rock things up right after this.
Okay, I think I found it. All right. Can y'all still hear me?
Yep.
I appreciate it. Sorry about that. All right, so with the 12-day moving average confirmation, I just want to talk to you all about the
Wait a second.
the moving average confirmations. Okay. So this is the 12-day moving average right here. Moving. So when I'm entering in and out of trades, I base my my entries on supply and demand, but I base the timing of my entries off of candle confirmations around the moving average. Now it doesn't really matter. Like if you use the 20-day moving averages, that's one of the pillars to how you trade. You don't have to use just the 12-day moving average. That's the one that I started off trading with. I started off in crypto, but the guy that was mentoring me was an old hedge fund guy, and he used to show me the charts for different hedge funds and things like that. And he showed it was a group of us, and on all their charts, they just had these two, the 200-day and the 12-day moving averages on their charts, and so I've been using those based off of that teaching and looking at those type of institutional charts. And my whole entire trading strategy is based around following behind institutional investors, entering when they entered in and exiting when they entered the stock. So if you look at the relationship with the 12-day, when I look for candle confirmations, and when you're looking for a candle confirmation around a moving average, what you want to see is candle open and close with the full body and the wick of the candle. So a wick of a candle looks like this long stem. You see how this candle has a stem on it, and it has a stem at the top and at the bottom of it. But this thicker part of the candle is the body. So you can see how NVIDIA was kind of crossing between and kind of, choppy right here. These are daily candles. And then it opened and closed the candle under it here, and then came back up and touched it. But after it opened and closed, this candle right here back above the 12, it was able to run up for a good amount, for a good swing, until it ran all the way up to $74. It lost it here, but it got back up the next trading day, opened and closed this candle, full body and wick, nothing touching this 12-day moving average, and it was able to run up again. So if we go back to let's look at Friday on NVIDIA, or not Friday, but this year, basically, July. So this is the hourly time frame now. NVIDIA was bearish here, right? And you can see it happened with just this moving average. If I could just trade, if I had to only trade with this moving average alone, I could still make thousands of dollars in the market, swing trading or day trading, just using candle confirmations around the moving average. So we know that we're kind of looking for puts or a downtrend, because this black line on my chart is the 200-day moving average. So just as a trading basic, when you're under the 200 on the time frame that you're trading on, the stock can pop up a little bit, but it's kind of in a downtrend, right? Because we're under the 200-day. And right here on NVIDIA, when we got under the 12 EMA here, so it was in a decent uptrend here. But then you see here on this candle, this is the first candle it closed under full body and wick at 130, 129 bucks, and it dropped down to 127. That's a $2 move. It bounced. It tried to get back above it. It opened and closed 2 candles here, but it couldn't hold it. And then when it opened and closed this candle here, if you would have entered back into puts here, right? The stock then came and just barely touched the 12 EMA. And from this candle on, it just kept dropping all the way down. Just using the 12. Open and close here without touching it, full body and wick. Came back and it kept touching it, but kept dropping. Then we opened and closed back above it here. And it ran back up, touched the 200. But like I said, since we're under the 200, all these little pops are just meeting the 200 and rejecting back down, which is completely different from a stock that's when it's above the 200. You see, it might pull back, but since it's above the 200, now when it's opening and closing over the 12, it's pulling back, but it's just to pop back up. It's in the uptrend while it's over this black line. So when you're using your EMAs, now, of course, the stock does drop a little faster once they cross. Like how this 12 crossed this 200, it started dropping pretty quick. But the confirmation will happen after it open and closes under that moving average, even if you're using a 20 or you're using whatever moving average. When you get the open and close confirmation above or below, that's when you want to look at entering into the trade and look for an entry price on it for a trade. So that's one pillar to how I trade. The other pillar is the supply and demand levels, which is they look like this on my chart. And, you know, if you hear people talking about the wolf chart, it's just a chart. Since I changed my name in Discord, and Mario will tell you I was looking for a name, and they were talking about me and making fun of me because I couldn't come up with a good one. So I finally came up with the wolf. And so that's why I named this chart the wolf chart. But I just changed my name in Discord probably like last year sometime. But I named this chart the wolf chart because I started out in Discord and I was posting all my gains in there, real similar to how like Sniper is and like a couple of other guys be posting their gains in there and profit loss. And you know, I was still trying to help people and teach them and give them advice on trading. And I had a couple of people come to me and was like, "Hey man, can you train me on how to trade?" And I had realized at that point that I had never really tried to train anybody to make money with stocks like I do. And so my first attempt that I fit, because my chart, if you ever tried to chart out supply and demand levels on your own, it's kind of technical and it's hard to just teach somebody how to do it accurately in a reasonable amount of time. Like you had to put a lot of time and energy into training somebody on this from scratch to come into every time frame and chart this out and chart it out accurately where it works. So I spent 3 months trying to find a way to duplicate my style of trading in a chart that would automate it for a person, but at the same time could still educate them on how to trade. So even though they don't have the technical ability to just come in and just start charting it out, they will be able to have a tool or a resource that will be able to show them where the money is in the chart so clear that they could still understand and start learning, but they can earn money while they're learning. So what supply and demand does basically is, if you look at this chart of NVIDIA, these green zones only show up on the chart if there's institutional money involved in the stock. So the only type of money that can move a stock this aggressively with a market cap this large is billionaires and trillionaires, right? Or $1 billion companies and $1 trillion companies. They come in like JP Morgan or like, you know, hedge funds that come in and buy the stock and create this type of price action. So on this chart, every important buy zone for NVIDIA is already here for us to see. So I don't have to really guess on catching a falling knife or guess on, well, where is it headed to? Because even when this market just crashed Monday, right? And the reason why I got 2026 leaps, even though that market crash did kind of like, I'm like, man, this thing don't even bounce. I was buying up NVIDIA anyway. So, but this zone was put on this chart on May 9th 2024, right? They bought NVIDIA here between the price of $88 and $91. And the stock then took off and ran all the way to all-time highs at $140, $141, right? So you fast forward to today or this week, NVIDIA confirmed the down move when it opened and closed this candle right here, like we just discussed, under the 12 EMA. So it lost that 12 EMA. So I knew they was getting bearish then. So at 120, they came back up, touched it, and then they dropped all the way down. And look where they bounced from. They came right back down to this buy zone. It was already on the chart, you see. So the way these zones work is that when a huge company puts a lot of money into a stock, just like if you ever tried to fill limit orders on a stock, say you're trying to buy an option, you say, well, I'm not going to pay that price for it. I'm going to wait till it come down to 95 cents. And you put that limit order in at 95 cents. And so that's a $95 option. So then when that stock comes down to that level, it'll start triggering your buy orders. But if you ever tried to buy like 50 or 100 options or like 20, and then it comes down there for a second, it buys like half of your order, and the stock price starts going back up and it doesn't feel the rest. Well, that same thing happens with institutional investors as well. They might have wanted a lot of NVIDIA between the price of $91 and $88, but as they're buying and accumulating, the price of NVIDIA starts to appreciate and it takes off, and it leaves this huge order still sitting here to be filled. So that's why NVIDIA did this huge run up, and then when it did start selling off, you see as soon as it touched inside of this zone, you see how that wick came and those buy orders re-triggered, and it took back off and went all the way back up to $108. Okay. So why is that important to us? Well, it's important to me to see, like up here at the top of TradingView, you have all these prices right here: open, high, low, and the close. Any candle I put my mouse on, it'll show me the details about it. So if I look at the low of this candle, it's $88.23, and the high is at $91.07. Okay. So now I know that this is the range they're accumulating, and and these zones are stacked on top of each other. So it's intense buying pressure here between $86 and $90.82. So you got this intense buy zone stacked on top of each other here for NVIDIA. And then you have some confluence to 200-day moving average still close into these zones as well. So when NVIDIA came back down, my job as a retail investor, I'm not trying to outsmart smart money. I just want to put my thousands of dollars or hundreds of dollars in with their billions and trillions of dollars sitting down in this range, or millions of dollars. I just want to throw my money in with them, because if they think NVIDIA is a good buy, has a good demand price here, then guess what? Sean Harris think NVIDIA got a good demand zone here, because I'm gonna put my money in exactly where they put their money in at, whether I'm buying shares or I'm buying calls. And then when they return back to $132 between that price and $134, I'm not second get, like they do this before earnings. It ain't nothing to even think about. As soon as they get up here, y'all gonna see me taking profits and selling all my stuff, and probably keeping a runner, not my shares, not my long-term shares, but any option contracts I have. Once we approach this sell zone, they already showed me what they're trying to do here. They already showed me between the price of 135 and 132.50 and 132.30, they selling NVIDIA right there. So if NVIDIA gets back to this level before earnings, I'm selling at the same spot they selling at. I'm gonna take some profit off the table right there. So this is how I use these zones in conjunction with the 12 EMA, right? And that's how you do really supply zone trading. You just buying at the level that smart money bought it, and you selling at that level that they sold at. Basically, same thing with Palantir. Even when Chris was telling everybody to buy down in this level, I was telling everybody to buy calls or earnings contracts for Palantir down in this level, because from April 19th, this is where they've been buying it. Every time it comes down here, pop up, come back down between $20.32, $21.50. They buying heavy here, buying zone stacked on top of zones. And then we get the 12 EMA confirmation here. It pushes up. This used to be a supply zone right here where they were selling off from, but they finally this on Friday closed above it. So now they can go a little bit higher, but they do have some other resistant areas above them from previous highs and stuff. So I'm not sure how far they're gonna let them go up, but they might be able to get to like $32, $34 or something like that pretty soon on that.
Hey, Sean, what's the supply zone again?
So a supply zone is just the sell zone. I'll show you an example of a supply zone right quick. But y'all remember when on Friday when Nvidia, I mean not Nvidia, but Palantir just kept getting stuck at $29.99. It's like the weirdest thing I ever saw in my life. I had all those contracts, so I'm trying to dump them, and they just couldn't break that level. Let me see if they got one. But the supply zone is just an institutional sales zone on the chart. So the supply zones are just where smart money is just sitting there ready to sell. So you see these red zones right here. These are sales zones, but they call them a supply zone. So these are different than regular support and resistance zones. Okay. It's a strong, heavy resistance zone if it's a supply zone, but it's about the volume of the candle that made it, which makes it a supply zone. Okay. It's just the volume of the candle. So when a lot of money comes into the stock at this candle at a certain price point, it creates these supply zones and demand zones on the chart. All right, hold on. So we go to, let me see, let's look at NVIDIA. So now I have support and resistance lines on the chart. Let's go here and look. Okay. So with NVIDIA or any stock, so we have these institutional buy zones to help with the entry price, right? We can see where all the money is. So if you're looking at this chart or you're looking at a chart, it's important. It's very important when you're charting and you're trading to not be blind while you're trading. Okay. So it's two ways to trade. Now, if you day trade, you can trade purely off momentum, off the EMAs, right? And but you also can trade with that momentum, but also being able to see from a greater perspective where the people with the money are sitting at in the chart. And then it becomes as simple as reading a book or reading a weather forecast, because you have all the information sitting right in front of you. You just have to interpret it. And then most of the interpretation work is already done for you if you can see enough information. So I customize an indicator here where these black lines are on this chart, these really thick ones. The thicker the lines, the heavier the support or resistance. And the thinner line. So you can tell with this stock, like it's choppy here. Like you don't want to trade the stock in this range. It's so much chop. But you just look at this right here, this gap on this chart. It's the same gap that's been on the chart, but now the indicator that I customized, it looks back 400 trading days and pulls the historical support and resistance lines for you for every stock in real time. And if you're on a smaller minute time frame, it updates itself in real time. But the point is, you see how this line right here has this big gap between it. No resistance between here. So these are what creates your A+ trades, because you see when NVIDIA popped through here, you see how easy that run up was. It was very simple, push up, $10 quick. But here, you stuck in this range for hours, chopping, chop, chop, chop. all this chop. But then when we break out of this heavy resistance or heavy support, you see how quick that drop. The same way this thing popped up quick, you see how fast it dropped? It dropped straight down. Nothing there to catch it. It's empty. Nothing there. So with being able to see these things, you can see, okay, I got money. I got smart money sitting down here waiting on NVIDIA. It pulls back. It comes straight to this old zone that's been here since May. It dropped right to it. Pop off of it. And then we open and close candles, and it's preparing to try to break out. It hadn't broke this trend line yet, but it's trying to get back above these sellers sitting right here. So it's got a huge sell block sitting here with institutional investor or a lot of money here sitting on these candles. It has to open and close above 109 or get above here, break and retest, break above, retest this level. But if it does, it has a real easy run up to 115, 157, right? It's going to run into the 200 at 112 around this range, but it's still going to try to, it got an easier path forward. Also on this chart, we had these, I see somebody asking about the premium and the equilibrium in this discount zone. These zones only, they just split the chart in half, basically. When the stock is way down here in this discount zone, and who asked that? Drea, okay. When it's all the way down in the discount zone, it's just telling you that you see how NVIDIA got down here and it was like it's oversold, right? It's oversold all the way down here. It's at a discount. And so it bounced from this because the price of the stock is like the intrinsic value and everything is off with NVIDIA. We all know how much money they're making, and who they're selling their chips to, countries, and you know the large big tech mega cap stocks, you know, are buying their tech. So when it's all the way down in these ranges, it doesn't really make sense fundamentally, right? So it's at a discount zone. This gray area right here is the equilibrium. So when the stock is in this little middle range right here, this is where the most volume is going to be at, because this is where bulls and bears are going to be fighting for direction up in the middle of the chart. And then once it breaks up to this upper half where it's like a premium, you see how when we get into these premium ranges on the stock, you see how it's selling off, because now we at 140, we at $1,400 NVIDIA up here. You know, that's extremely high, and it gets to like where it's becoming like, even though their PE ratio, you know, they're qualified for the price, but this $14 a share, you kind of get into that little you're speculating a little too much. So it's a high premium on the shares. Like nobody really wants NVIDIA at $140. Like nobody looks at NVIDIA and gets excited and say, man, I'm going to buy 100 shares of NVIDIA at $140 or $1,400. You know what I'm saying? Like this really is like $1,400 they split, but nobody's excited about, you know, buying NVIDIA and just, I'm going to load the boat at, you know, 140. But down here at a discount, you know, people that's, you know, looking at where they at when they went down to 90 something bucks, like if you're going to buy NVIDIA, this is where you buy them at. Like it's at a discount. It's like going into a store and all the TVs on sale or whatever, you know, you like, if they drop the prices down literally like 50% off or however much, 30% off, like, and it's like the discount zone is like, it's more appealing at this price. So that's all these things do is split the chart to that. So you can see smart money. It's not about really just, you can see where the candles, okay, the price range, where the stock was bought by smart money. So that's how you see the smart money, right? If a person buys and this volume is extremely high, like they bought in at see, I don't you see at the bottom of my chart, I don't have any volume down here. I don't have any volume at the bottom of my chart, just for the overall volume of the day or the volume of that hour. I look at volume for like the actual price zone, because that's what's important. Like if we go to Netflix chart, I'm gonna show you why that's important. And it was just important with Microsoft as well. But if you look at Netflix on the daily time frame, I'm gonna show you why that's more important than that volume at the bottom of the chart. Is because if you focus on the volume, right, that happened in the exact range where big buyers came in, this horizontal volume, not this these volumes that's okay. On this trading day, it's a huge amount of volume, you know what I'm saying, or whatever, or within that hour. I want to know when this counter right here, who came in and bought this here? Like what happened here? Because so now the indicator can pick up, okay, a lot of volume came into NVIDIA between 449 and 460. So that's critical information to me because when I'm watching something crash, like when NVIDIA had earnings and then it started crashing, right? Look exactly where it came back to. It came back to the same order, this big giant order that came in February. This happened all the way in April, right? So they dropped and came here, accumulated, and then they shot back up and went all the way up to $700 and something from here, right? So all I'm doing is, okay, I can buy some shares here. I got a second level confirmation here that they want to go up. They got an open and closed candle above the 12 EMA. So now they're trying to reverse back up. And now I got a third level confirmation because now from this trend line candle, this diagonal green line, and it has open and closed candle above this diagonal line and the 12 EMA. This gave me confirmation that the momentum was about to come in, the stock was going to run up. And looking at it here, just like I said, like reading the book, if I'm getting in here, I got historical resistance here. You see this kind of rejected here previously, right? I get in here, I got to take profit at 639. But also my strike prices on my options are always equal to or lower than my first take profit target. Like always. I don't, it's good to look at the delta and stuff like that, in your contracts. But in my style of trading, I really don't spend a lot of time on that because when I buy my contracts, I'm either in the money or I'm at the first strike price with a confirmed breakout. So this is daily time. I'm in NVIDIA here, right? And I'm in NVIDIA here, right? So when I get my confirmed breakout, my strike price is going to either be at 617, like in the money on this candle that confirmed, the one that's not touching this diagonal green line or the 12 EMA. I'm in the candle here, and my strike price is going to be between 640 and what's this candle close at? 613, 615, whatever this range is. My strike price is going to be max. I'm going to go with 640, 638, whatever this line is. That's the max I'm going to go out. So the chances of me hitting this first target is very high because of I'm on my third level of a confirmation. I see smart money sitting here pushing it up. So I know who's behind this push up. So I know it's not no little weird push up or like something that's going to trap me. I see who's buying. I see where's the buy, the logic behind the buy. I know this is orders being filled again. You got an extra, when they bought again, another demand zone appears. So you got two demand zones stacked on top of each other. Okay. Then we get a confirmation over my 12 EMA, which means that, okay, it's trying to reverse trend. So it's finna go up. And then if I wait and get a third confirmation, it broke the trend line, and I got this floating candle here. Got my trend line break and my 12 EMA. This candle not touching either one of them. That's my confirmation candle that momentum finna come in. And I'm getting earnings calls because nobody's thinking about NVIDIA. Everybody hates them now because they drop. And I got my earnings contracts, and then we hit this target. This is my first target. So I'm taking profit here. I'm taking profit here. And I'm dumping everything when I get to premium and supply zone range. I'm out.
Hey, Shon, is that a daily chart?
Yeah, this is the daily. Yeah. Yeah. Then at the same time here with this confirmation, well, go ahead. You got another question?
Shon, I had a question.
Go ahead.
Can you repeat that about the strike price again? You said, tell me how you say you strategize and select your strike price.
Okay. So my strategy on strike prices is that I pick strikes based off of my first target. Okay. So my first target is always going to be the first level of resistance I see on my chart. So with my chart, so when I get in NVIDIA, first of all, when I get into a trade on the daily time frame, okay, that means I'm swinging. Okay. Now, if I get into a day trade from the 1 hour, the 30-minute, 15-minute, then you know these levels are going to be closer to the current stock price. But NVIDIA crashed here. I know they had earnings here. See, look at this. Earnings are sitting right here. The E's on your chart are the earnings day. I click on that. I know they got earnings on July 18th. This is back in April. So I have an opportunity now to get earnings contracts with a strike price of 600, because when I bought my earnings contract here, my strike price is going to be equal to or under 600, because that's my first level of resistance from this entry. Okay. So, but my expiration date was for after earnings. So this is how I always play earnings. I play earnings from demand zones on the daily chart and the weekly chart. Just like when nobody's thinking about the stock, like nobody's even thinking about earnings, I'm thinking about earnings when they hit these zones, because I'm gonna play the earnings with the institutional investors, and I'm not gonna try to play them from earnings week. Like by the time earnings week come, I'm out of like 90% of my earnings position. Just like this Micron stock is getting close to a demand zone, right? And you see this little white label right here on my chart. I'm already ready for one more push down. Like as soon as they get down to this level, I can already see right here on back in February, smart money bought them between $79.22 and $80.66. I can already also see that this E right here, their earning days is for September, right? So when they come down here into this demand zone, and they got another one right under them at 174. I mean, at $74.75, whatever. And this probably is a stronger one. You see how this has a huge support level mixed in with a demand zone. So they might push through this one and come down to this one. And while I'm looking at it, let me go ahead and add an alert. So it's gonna it's gonna push through there, and it's gonna come down to this range. Then I'm gonna get my expiration date for my earnings contract is gonna be earnings. It's gonna be an earnings play.
This September, yeah. Okay,
Yep.
I'm following you.
Yep. So it's gonna be an earnings play. My strike price gonna be around 180, 187, 188 or lower. If they come already down here, it might be at this price. And then I'm gonna get my earnings play, because I like this company, because when I'm looking at them, this is what I'm looking at. Okay, they beat earnings, beat earnings, beat earnings, they beat earnings right here. They got earnings coming up in September. They had a small revenue decrease. They got a strong buy from analysts, and they got a sale on the stock. So we talk about divergence inside of like RSI and the stock price and stuff like that. But this is a lot of divergence as well. Fundamentally, like they got a strong buy, and they selling off after they didn't beat earnings, like every earnings. So I'll be looking why Nvidia selling off and all that. They down on chip stocks. I'm gonna be in my earnings play here, my first part of my position, or here. And then see they're gonna pop up, and then it's gonna be like Netflix. You be up 300, 400%. Sell most of your position, and then let the runners run, and then you be in and out of earnings before everybody else started doing all that FOMO stuff, and they raised the premium on the contracts. They just raising the premiums for us to exit at that point, because they're gonna make this the earnings contract sky high, but we already holding them because we got them way back down in this range.
Right.
So that's one way to play the.
So you can use that same strategy for stocks too, right?
Huh?
You can use the same strategy for swinging stocks, right?
Yeah, exactly. All you need on this chart, you don't even need most of this stuff. To be honest with you, for stocks, all you really need is the buy zones. People that buy and hold stocks. All you need is all you gotta do is set this thing to 1 week. And then it kind of is eye opening too, because the SPY just skyrocketed back up from this weekly demand zone, right? It hadn't retested it, but as soon as it got in here, good, it popped up, but it still can go as low as 493, the SPY. But as soon as it touched down in this
Right.
weekly demand zone, it popped straight out there with this huge candle, right? And look at, if you go through big tech and look at all of them, look at Microsoft, for example. You see what they did? They came right back down to where they were in this demand zone, came here, made this huge candle, and they're trying to get back out of it and come back up and get back above the 12, right?
And so basically, that your entry will be when they're here in the buy zone in the green.
Yeah, if you're buying shares, you can start buying
Yeah.
shit. You can start accumulating your shares here. Your stop loss for demand zones is if you're on a weekly time frame, you would get out. If Microsoft closed the week under the low of the candle that created the zone, you would get out of your shares, because that would mean this zone would be invalidated and they're trying to come down to
To the next one, right?
to the next one. Yeah.
Gotcha. Okay. Thank
Share.
you.
All right. No problem. So if we're looking at candle confirmations, and then the demand zone entries, these are the pillars to how I approach the trading game. And whether you're on whether you use the 20 or whatever you use, it doesn't matter. If you get you got to take everything off your chart, like everything, right? Take everything off your chart except for your foundational EMA. You know what I'm saying? You got to figure out what that is. Mine is the 12. Okay. And that you got to learn the behavior of the stock price around that EMA, right? Sometimes you're using, like, if you just do everything with the 9, some of those smaller ones like the 5 and the 9, it may take 3 candle confirmations opening and closing without touching the 5 for the stock to go up quick, or it may, or on the 9. I know from looking at the 12 that if I had nothing but the 12, I could still successfully trade stocks and make money, make a living off of stocks, or make enough money off of stocks with just only this 12 on my chart. But I put all the other indicators on there just to give me extra confirmation. Like, if I don't want to, like, if the stock market is in a downturn, I want to see the stock bounce from here, but also I want to see it get back. Like, I want to see Nvidia bounce from here, even though I got my leaps here. But I also would like to see Nvidia recapture this anchor VWAP and then recapture the 12 EMA, so that it could come up and approach my third level confirmation, which is breaking this trend line. And once it does that third level confirmation, I get short dated contracts and get a bunch of them and run it up to 130, because I know they're gonna get rejected here, get their butt kicked. So I'll be running short ones up and get out, make some money. But what I've been doing is I've been playing them down, taking all my put money and buying leaps. So I got 2 leaps from doing that so far. So I'll ride these puts down, take the profit from the puts, and buy the leap. And I'm hoping to exercise that leap. I just got 2 of the 2026 January leaps so far from buying puts. And I'm going to try to use those and just hold Nvidia. If they be earners, especially, I hope they be earners, and then I will exercise those contracts and keep the shares for them. All right. And before I start, I know you guys want me to go through a few stocks and look at them, but I also wanted to I was showing you these candle confirmations and teaching you this about supply and demand, but I also want to show you guys how to fish for some stocks using the scanner or the screener that's built into TradingView for some of the guys that's on here that's already got a trading style. And if you need to duplicate a trading style, some people use the Wolf chart and some people use King D Fresh. I don't know. I've seen Mario chart before. I don't know what his chart all has on. I've seen alphas. I know alphas is simple and clean as well. So what you got to do when you got a person trying to show you a chart is you just need to know what are your question needs to be, how do you confirm the move? Right now, if they can't tell you that, you know what I'm saying, I don't, they risking, I don't know. It's not gonna be any consistency, right? But you have to know when you're looking at somebody's chart, what is the confirmation system, right? So when you understand a person's confirmation system, the sooner you can understand that is the sooner you will start making money. You got to understand the confirmation system. Like with my chart, the confirmation system is the same on every time frame. It's this right here. For calls, you're looking for this floating candle. This candle right here that's not touching this green diagonal trend line or this blue 12 EMA. When you find that candle, it's going to tell you the direction. You see it, this candle is here. If I go to NVIDIA on the 5-minute time frame, it's the same pattern every time. All you got to do is get out when you about to hit the resistant lines or whatever. And let's go here. So here go NVIDIA floating candle here. Entry would have been 103, 104, 5-minute chart. You got your diagonal line, you got your blue line, you got your floating candle here. You got to take profit target here, here, and here. And we hit all three of them, you're out of the trade. Period, point blank. Cut, dry, simple. It don't matter what time your frame you go to, it's going to be the same every time. You go to Palantir stock, you're going to see the same exact pattern. And that's why I can consistently make money every day with it, because I'm looking, all I'm doing is being patient. I'm just waiting on the breakout. Like I'm just waiting on this confirmation candle. Like I'm waiting on it, and I'm just don't want it to break back beneath the 12. But you see, I can see already, like I said, like reading a weather report, we got buyers here, we got turbulence up here, we got a wide open gap between here with no resistance for Palantir. I can jump in on this floating candle right here. As long as I don't lose my 12, I'm going to my target. I'm selling. I'm not playing with nothing up here. I don't want none of that. And same confirmation. Got my floating candle here, diagonal trend line here, 12 EMA here. That's my entry candle for calls. This is my exit right here. If my entry is right here at 29.19, my strike's going to have to be a 29 strike because we ain't even getting out of 29. So I already know what my strike price is going to be. I ain't got to look at no Greeks. My strike price is in the money because my target is in the money. So I'm getting in here. It's going to ride up, shoot up to this. I ain't asking no questions. All the position gone. It might get a runner, right? That's it. Same confirmation all through the whole chart. Trend line break, floating candle between the lines. Take profit right here. My strike price is going to always be under the first target. So if I'm getting in at $27, my strike is going to be a 28 strike or a 27 strike or a 25 strike. If I'm just, I don't know. So I'm going to get in here, take profit here. I'm out of 90% of it here. If I'm scalping, I'm taking profit here with my runners. Same thing for puts.
Shon, is it always a floating candle though?
Talking about for the confirmation?
Yes.
When I say floating candle, I'm just saying it's not touching that trend line or it's not touching.
Okay, the one that's not touching. Okay.
Yeah, that's all I'm saying. I'm saying it looked like it's floating to the eye. It's not.
Yeah.
I'm saying like right here, you see how this one right here, the wick is touching the red trend line. But this candle right here, when I say floating, I mean it's sitting in between this red trend line and this 12 MA, not touching either one of them. See that?
Gotcha.
So since this candle is the one not touching the trend line or the 12 MA, I'm entering my puts here.
Right there.
Yep. And I see my take profit is here and here. If I'm entering in here at $27, my strike is going to be a $27 put because my first target is so close. So I'm riding these 27 puts down. I'm taking profit here. I'm taking profit here. Right. And so this little bear flag it did, I'm out of that. And then it's peaking my interest again here because it just opened and closed another candle right here under the blue line. My strike gonna have to be a 26 because it's so close. I get my 26 put, it went ahead and broke down, shot down.
And the trend is bearish because it's still under the 12 EMA, right?
Yeah, under 12 EMA, then it messed around and broke under the 200. So
yeah. That validates it even more when it's under that, right?
Yep, that's right. And then the opposite happened over here.
Okay.
Yeah, we opened and closed, ran up. All your targets sitting on here, all your resistance levels, every historical resistance level of Palantir from as long as they've been for the past 400 trading days are on every time frame. Well, on your correct time frame. So all that drawn out resistance lines and all that stuff like that, you know what I'm saying? Like it do it for you so you can focus on the main thing, which is the confirmations. So we got our resistance line we got the indicator looking back 400 trading days up to the current trading day. So if I get in on this candle right here, I can run it up. My strike price is going to be under 20. A 26 strike. We at 25. It's going to either be a 25 strike or a 26. We in the money right here, taking profit. Next target right here, you out to trade. So and
okay.
You leaving runners for that part.
And the only time you would leave the runners if it's staying with the same trend above, since this is bullish because it's still above the 12 EMA.
That's it. Yeah.
All right. I'm picking it up.
That's it. If it's running up here, if I got a runner and I'm confused about it, then you pull out that you just type in fib if you got trading view, not fig. I mean fib. You type in fib, and this is auto fib extension. Because people get intimidated by trying to draw fibs, but if you use the auto fib extension indicator, you see how it dropped down here? Because it's looking at this current price action. But see, you find a time frame where it's extending up. So maybe you go to the 15-minute. Then now, even though you don't have a lot of resistance up here in Palantir, because Palantir is at, a level where it doesn't have much resistance, you can come here, and so you can see levels above it. And you can go even to like the 1 minute if you want to see closer levels and see if it gives you. So it extended it on the 1 minute. And so you don't have to be intimidated and try to go get, the let me go to another one. It has less stuff on here. You don't have to be intimidated about a fib thing because there's so many tools on TradingView that you could use to get those levels. Okay.
Okay.
To the downside of. Okay, so before I get into the stocks, we're gonna end on looking at some stocks and the health of the market. The other thing I want to touch on was the VIX before I get to the screener. The reason why I can see the VIX spikes before they happen and take advantage of puts, or if y'all see me on Discord and I'll be like, hey, the VIX about to spike, and then the market drop like right after that, because I be trying to send out smoke signals to make sure or if I say, hey, when the VIX gets to, if it's dropping and I say the VIX gets to this level, go ahead and start selling your calls, or go ahead and start selling your puts. It's because this chart works the same way with the VIX. And when I see stuff happening on the 1 hour time, like that huge VIX spike that ran all the way up to like 100%, look how I look on the wolf chart though. And why I was like, hey, the SPY about to, it's about to, y'all need to get out of calls because the SPY about to tank. It's the same breakout pattern. Surprise. Same one. So when the VIX is doing crazy stuff on the 1 day in the 1 hour time frame, and I'm seeing that it got a confirmed breakout, like I'm automatically rolling and looking at SPY and seeing and watching for the breakdown confirmation on SPY. So when I see VIX with these confirmed, like this is a confirmed bullish breakout, and I see the same gaps in VIX. Look at this gap. Like this is huge gap on the 1 hour chart. And it sucked it all up, came right to the line, drop. When the VIX spikes like this, it destroys the SPY. And the reason is this is a volatility index. And so it doesn't think, it's not emotional. It's not a bunch of people just trying to sell. It's algorithms and coding. So when the VIX spikes to a certain level, these machines that these hedge funds have and these volatility indexes, they control like, money with pension funds and all these other things. Like all the VIX has to do is spike a certain percent, They don't ask any question. They don't care how good earnings were. It just automatically sell stocks, like automatic, like you just sell them. And so when it does that, and I see these breakouts, and it's like free money when they get, especially if it has a. I'm not talking about like on a 5-minute time frame. I'm talking about when they be doing crazy stuff on like the 1 hour and the 4 hour, like this right here. When it open and close this candle right here, and I'm like, man, if the VIX get over $20 or if VIX get over this level, man, like, hey, and then D Fresh be right behind me and saying, hey, this level break, it's like clockwork, right? Like I'm telling you, hey, the VIX about to spike up and D Fresh, like if the SPY lose this level and then the VIX spike up, SPY lose that level and we tank, right? Because this thing, when it spikes, it makes other things automatically sell stocks, like just computer code that's designed to sell. When volatility or fear hits the market and the VIX spikes, they automatically just sell like billions of dollars in stocks. And then when that happens, that triggers CTA, commodities machines and that stuff to start selling stuff too. So then the people over the hedge fund, when they see this, they jump in and they look at Microsoft and they see that all this stuff triggered and it was an overreaction. Then they jump in on a 1 day on a 1 day time frame, and they like, Microsoft is back down at the demand zone while everybody's scared and running and retail selling. Wall Street while retail sold $1 billion worth of stocks last week, Wall Street and hedge funds bought $14 billion worth of stocks last week. JP Morgan put that headline out. And I remember after I saw it, I was like, look, if y'all see the demand zone, especially people with the wolf chart, if y'all see demand zone on a 1 hour chart, 4 hour, 1 day, buy it because they already done bought it. I saw them down here buying. So I knew that they was buying the fear and enjoying this little run back up for now. I'm not saying it's going to keep running up, but you only need to run up for a little while for your contracts to go up enough to sell them. Right.
Yo, Sean, what up, man? This is Fresh. Hey, on the fix, what are you looking at? The hour? Is that what you keep it on throughout the day? Because I really don't use the VIX, but like you said, man, sometimes you will throw that out there that, hey, man, if VIX hit this number, it's coming down, and I look at my chart and be like, man, how does Cat get that? So,
right.
Is you on the hour, 4 hour, what?
Yeah, the 1 hour. So you go to the 1 hour VIX. Now you can go to the lower time frames. It literally works on every time frame, but mainly like for the spikes, when you be in there talking about the key levels to break, right? You need VIX to break, certain key levels, like right here on a Friday, right? When SPY was trying to go back up, which it needed to get all the way to 537. But what they did is just took it only to the 12 EMA on the daily time frame to touch it, right? But here, like on a 1 hour time frame, you go look at the SPY activity versus the VIX. Like when I'm saying, this is what I'm seeing, Fresh. I see this confirmation from my chart right here. This candle when it's open and close on a 1 hour time frame to drop. So now I know that it might consolidate, but as soon as it bounces like this bear flag, this ain't nothing but a bear flag. It's just gonna bear flag right into this 12 EMA and it's gonna plummet. And when it does, is I knew SPY was gonna make his run up because when the VIX, the opposite happens. When the VIX starts dropping, like it's trying to get back under 20, as soon as it starts dropping like that with decent percent of volume and it starts dropping, those volatility indexes, they just machine code. They just start buying the S&P 500. They don't care about what just happened in the market. They don't care about the news. They're just designed to buy and sell based off of volatility. Billions of dollars though. So so when it starts dropping, it just starts buying the SPY, buying it back up. Buying tech stocks. It just starts buying these indexes back to because that's just what they're designed to do. So that's why when I can look at this thing break down and see your levels breaking and say if it breaks in the upside, bull's gonna go here. They work together, and I can see it. Only reason I can see some things earlier when we going in direction is because this confirmation. You see how this confirmation happened right here, right? And SPY could have been still going up, but since I knew this confirmation happened, I'm preparing for it to go ahead and do what I know it's going to do. So I know after I saw this confirmation candle, even though it was consolidating for another 3 hours and the SPY was doing what it's supposed to do technically in the chart, I knew that it was going to take off and break up through this gap because I already got the confirmation on my chart. So then
Makes sense.
So then I can roll out ahead of time and have cash, and I'll say, okay, now I'm waiting on them same levels fresh waiting on because I'm looking at the same levels, right? So now I'm just waiting on, I'm not going to just buy puts. I'm going to wait on the breakdown confirmation, but I know it's going to have follow through because I know the VIX about to have follow through. So then I can stay in my trade with confidence. I already see what it's finna do, right? Just like when I was calling for the SPY to drop, when it was doing all this run up, it didn't seem like SPY was going to drop, but I knew it was going to drop because once it opened and closed, this candle right here under the 12 EMA, I knew that all SPY was finna do was come touch it and plummet. So when I was like, hey, SPY finna drop, at first I had like 537. I had a demand zone here, but then it just bust through all that. And, now it just has this demand zone sitting down here at 500 to 490. So now SPY has to get back above this on the daily time frame. They have to. Like, the best thing for SPY right now is if it will gap up Monday and open and close a candle over here, it can avoid dropping. But if it just keeps consolidating here and just waits on NVIDIA earnings or something else happens with the carry trade, the Japanese carry trade, which is where they buy the yen for a discount. When the Japanese raise their hike their rate and cause the yen to increase in value, that it was like a currency margin call for a lot of people that have stocks. So they had to liquidate stocks. That's why when the market they really started tanking bad when the Japanese market was tanking and all that stuff. There's a thing called the carry trade, CARRY trade. Just look it up. Just look up Japan carry trade. They're still worried about this carry trade. And then also the people that got the same type of risky trade with the Chinese yuan, they worried about China doing the same thing. So hopefully China doesn't hike rates or something unexpectedly and it's going to cause the same type of intense sell-off again if they do that again. And so when that happened and mixed with the labor report, that's what caused that fear drop. The only reason we came back up is because the Japanese bank said, okay, when there's a time of uncertainty, we're not going to cut rates. So then they started buying the market back up. And then when that other economic data came out showing that we wasn't too close to a recession, then that's when the VIX and all this stuff started dropping and plummeting again after that. And then it let the SPY come back up some. But everything right now is just we're in a news cycle right now in the stock market, or some call it the distribution cycle. We're in this cycle now, and it's so news sensitive. So you follow the technicals to make the money, but you gotta look at the economic reports, the actual dates and times that they release, so that you can't be in a great technical setup and then this happen. You see what I'm saying? So you want to be watching, just to see, know what's coming around the corner, but you want to trust the technicals because that's how we make our money. We make our money off the technicals, not the news, but you don't want to get tripped up by the news. So you got to keep your ear to the street basically with that. So let me show this right here for the, advanced traders. And even if you're not advanced, this will still benefit you. This technique right here. So on TradingView, on every TradingView, even the free TradingView, doesn't matter which one it is, they got heat maps on here you can click on, and it shows, the heat map thing to show you what's moving, what's selling off and stuff like that. So you got that, right? But you also have, let me go back to that. You also have screeners here built into TradingView. It doesn't matter if you have the paid version or the free version. You also have calendars in here. They have the economic calendar, earnings calendars, dividend calendars, all that stuff built into here. A lot of people don't know about that. We just chart with it and that's it. But they got a lot of free tools in here that's kind of mind blowing. So this screeners one, if you go to stocks under screeners, now first of all, this will benefit you. Now, if you're a person that's traded a lot and you're consistent, this is golden for you, right? if you're still working on understanding what's my confirmation like, what is the confirmation that you use to get into a trade, to get out of a trade? Only a person that has consistent wins will have a confirmation system, and they look for that confirmation system and they lean into it, and it's their bread and butter. That's how they make money. You need to talk to that person, whoever that person is, or what trading style. Ask questions like that. What is your confirmation to enter in the trade, right? And then you use your support and resistance lines to get out, right? But for a person that understands what their confirmation is, you go to this screener, right? And to say if you are a person that trades with EMA crosses and you scalp, right? So you go to technicals, click on that, and then you go down to the exponential moving average here. You click on that. Now, if your EMA that you use is the 20, right? Or if fresh as you on here, what EMAs do you use for crossover to the downside and the upside? If you still here, or if anybody knows which one he uses. Does anybody know?
I think he uses the 9 and the 200.
9 and a 200.
Yeah.
Okay. So then you would take the 9 here, and say if he trades, say he does his trades on a 30-minute. You'll say on a 30-minute. I mean, say if he does his trades on a 15-minute. So I'm gonna look at the time frame one above that one. Okay. Then I'm gonna hit add filter. So now I'm gonna go back into this EMA setting. I'm gonna go to manual, and I want to see where the 9 EMA has crossed down, right? So when the 9 EMA crosses down on the 200, right? So I'm gonna choose EMA again on the value, crosses down on the 200-day moving average on the 30-minute time frame. So I chose. So if I trade if I'm looking for opportunities on a 15-minute, I want to see it crossing down on the 30-minute time frame, so I can see if the cross has already happened on the 9. That means it's already in the downtrend. But if I want to try to get ahead of the trade, I would look for this same thing on the 5-minute time frame and wait for it to happen on the 15. But we're gonna look on the 31st. So it hit apply, and it gave us some stocks that might be bearish. Let's see if he uses the 200. Do you know if he uses the 200 or the 50?
I'm sorry, what did you ask?
He uses the 200 or the 50. Is it the 50 or the 200?
No, I think it's the 200, but don't quote me.
Someone commented the 50 as well.
Oh,
Okay.
really? Okay.
That's cool. Hold on.
What was your question again?
I was trying to see what EMA D-Fresh uses.
Oh, give me a second. I have it.
Let's see. If he gone, it's cool. It's cool.
Let me.
Someone did
He
say
uses
9.
he uses the 9, 20, 50, and 200.
20, 50. Okay. Well, look, I'm gonna show you it with the. So I use a 12. Let's see. I'm gonna go to the 50. We're gonna go to price. We're gonna go to the 12 EMA. And
I needed to follow you.
Let me see.
Yeah.
Below.
Is that you doing a recording? So will we get copies of this?
Yeah, I'm recording it this time. Yeah.
Okay, cool.
All right, price. So look at this setup right here. So since I use a 12 on my chart, on the wolf chart, right? Since I use a 12 on the wolf chart, I'm gonna look for where the 12. So what this is saying in this screener is basically, I will show me stocks on the 30-minute time frame where the 12 EMA. Show me stocks where the 12 EMA is below the price. So what that looks like is the 12 EMA is the blue line I use, right? So if the 12 EMA is below the candles, that means that the stock price is going up. Okay. If the 12 is below the candles. So I want to see stocks that where the 12 MA is 0 to 5% below the stock candles. So basically, I want to see the candles on top of the 12 MA. So I'm looking for stocks in the uptrend. So now when I do that filter, it gave me 5,000 stocks. That's a lot of stocks, but it gave me Apple, Microsoft, Nvidia, all these stocks that were running up during the market hours, though, right? So now if I want to be picky and filter it some more, I'm gonna go to analyst rating. So just give me the stocks that give me a stocks with a strong buy rating, okay? And also give me stocks that got a market cap of 10 billion and above. Okay. Now I'm down to 125 stocks. All right. So then I will go and look at and see if these stocks were doing decent during the trading hours. So I did it from the 30-minute time frame. And so if I go to the 30, it should be in a decent uptrend, right? And if I go to the 15-minute, it should be, if I'm trading on the 15-minute, it should be in a slightly better uptrend for that day. So it gave me Microsoft that it had a decent up move. Everything sold off at the end of the day, but it was trying to show me stocks that were in a decent uptrend during the market hours. So let's see what Amazon did. I think Amazon started crashing at the end of the day too. Let's see, go to the 15. Now, the good thing about that is, so Amazon close to breaking this trend line. It broke the trend line here and pushed up to the target. I didn't catch the Amazon trade Friday. I was too busy trying to manage Palantir. But see how if on a 15-minute time frame, we had a breakout confirmation here. We ran up the target here. And then, of course, at the end of these last little minutes of the market during power hour, the stocks were just, selling off. So, but you can use a screener like this to screen for, it don't matter if it's penny stocks or anything. You want to look for penny stocks, you would just change the market cap here to something smaller, something different, right? Or you can just change the analyst rating to like a buy, and it'll give you a different group of stocks, like Broadcom and Eli Lilly pop up on here because they was a buy. So you can look at their chart. They came up on here. Let's see what they look like on the 15-minute. Whoever's about to say something, you can go ahead and talk. So they had a good push up, hit the target, and fail. So, and see, these targets are here for a reason. You see, it's even though it's kind of in a down channel and it can break higher, right? Lily. But look exactly. You see how this chart, since I'm pulling support levels automatically without having to do it myself, you see how accurate that level is. This is from back when Eli Lilly was struggling at this range. You can see it's been constant resistance. It finally mounted it here, fell down, broke above it, ran up to like 960 some bucks, came down here, bounced off of it. And so it's not a coincidence that when we was in a trading hours, had this big bullish candle, and this is where you should have been out at here. But the more, like I said, the more you can see, the better you can have a trading plan. Like it's choppy here. You see all these lines so close to each other. It's a choppy zone here. This your A plus trade. No resistance from 821 to 855. You got a good gap here. Got a great gap here. These are the areas you don't want to trade them down in here because it's so choppy.
Does that gray area on your chart, does that pop up in real time, or is that after when you're back testing?
You talking about this? You said the gray area?
Yeah.
Oh no, I said this is a great area to trade right here because it has no resistance. These gray areas are automatically, they're already on the chart.
Oh, okay. So these gray areas populate though. The top one right there, Lily, when it got to that zone where it was the bulls and the bears fighting, you're saying that that's there real time.
Yeah, that's already there. Since it's already on the chart. But the thing that slapped it down was not that purple zone, but more so that purple zone is here because this resistance line was already here. You see that this resistance line is what it rejected from.
Yeah. Hey Sean, I got a question. On SPY, that was a 529 to 533 choppy area zone, right?
Let me see.
It could have possibly ran up $4, but because it was going to chop so much, it'll go up 531, come back down. So even if it eventually ran up $4 and got to that 533 level, it only pay you like a $2 run price, right? Like it only pay you because it took so long to get there. It might have took 4 or 5 hours to get in a certain, because it's choppy. Would it pay you? It's going to pay you cheaper than actually what it really is worth, right?
Yeah, but what time frame are you talking about?
I want to say I was looking at it 15 minute, 30 or hour. It was like a big range of 529, 532, I believe. Like those are the areas that I've been kind of studying not to stay away from, because I don't care if it's gonna run $4 if it's gonna pay me, a $2 price by the time it get there. That's just I could be wrong.
You talking about this range right here?
Let me see. Zoom in a little bit.
Were you on a 15 or what time frame were you on?
I think I'll be on the 15 a lot. So yeah, I would say the 15. You can see it, 15 or an hour, you could definitely see it.
Well, yeah, from that now you don't want to trade SPY. You don't want to trade SPY from the 1 hour time frame on a Friday, or if you're trying to get if you're trying to get somewhere, especially on Friday. But if you're trying to get somewhere on SPY and you got same day, you got 0-day contracts, you gotta look for your confirmation on like a smaller time frame, like unless it's in the morning, like when you get toward like the 3 minute and stuff like that, like you need to like right here, you see how we got heavy resistance here. We got buyers that stepped in here. We can see the buyers here. We had a confirmation candle right here. You see this confirmation candle?
Yeah.
All right, so we got this confirmation candle. We got our trend line right here. This candle right here didn't touch the trend line or this blue 12 EMA, right?
Yeah.
All right, so this is 3 minute candles. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So what? 30 minutes. Within 30 minutes, if you'd have got in here because that's why. See, this trend line break this third level confirmation. See, I could have got into the trade at this candle right here because it opened and closed over the 12. But see, we looking at the third level confirmation specifically because of the momentum. You see how we got confirmation on the move up here. We got our first confirmation that they're trying to push it up because look at all this money sitting right here on a 3 minute. Look, it's stacked on top of each other. So everything wicking and wicking and wicking. We got a confirmation candle above the 12 MA here. But then if we would have just waited, that's why we waited for this candle. If we scalping, once this candle opened and closed, 30 minutes, it went from 531.64 to 535. You know what I'm saying? 534.51 in 30 minutes. 30-minute push, pushed it up, and you out. And then your target is already on the chart, waiting on you. See, the target coming from way back here somewhere. So it already knew that at 534.52, you're finna get smacked. So that's how you don't get caught up in that choppy. See, this right here is at the end of the market. So, and you still didn't get a confirmation candle here because you got the trend line, but every last one of these candles are touching the SPY. I mean, it's touching the 12 EMA. So so once a candle would have opened and closed above here, then you're gonna get some momentum push back to retest this. But this right here happened quick if you're on a 3 minute. Now on the 5 minute, it still happened kind of quick. You got this confirmation here. We pushing out of it. We got the candle which I call the floating candle, only because it's sitting between this green trend line and this 12 EMA. It's not touching either one of them. Same exact confirmation on the 5 minute time frame. You got 1, 2, 3, 4, 5 candles, right? 25 minutes, you out of the trade. You got 2 take profits too. You got to take profit here, and you got to take profit here. So if you get in this trade, say, okay, I'm in on this candle. My strike price is going to be beneath the first target. So I'm going to get the 32 strike, right? It ran up, 32 strike, you hit, you in the money. and you out. That's a lot of money in a short amount of time. But
did that avoid the choppy zone? The choppy zone was like earlier, right?
yeah,
Like
yeah. So
that's
yeah,
at the end. Okay,
yeah.
I
This
got it.
this chop right here, yeah, that's a bad. It look bad because look, you got double resistance on top of each other here. It's like everything kind of stacked up. But see, you got a candle confirmation here
Let me see.
for
Yeah,
the run up, but it popped all the way through here quick. And then
came back.
by the time you got into, if you'd have got in on this next candle, it just fell right back down. So it would have stopped you out of the trade here, and then you'd have had to wait again for this setup
Okay.
because it's resistant. But see, when you got resistance that close, you know what I'm saying, it's kind of hard to
That's
trade.
kind of signals choppy. That
Yeah,
signals,
yeah, yeah. That signal, like sometimes when I look at a stock and I look at the chart, I'll be like, the risk to the reward is not there because like you just so the resistance is so close to the breakout, so you got a high chance of just coming here and bouncing. It did. I mean, but you think about it, it came up, it came down here, right back to the demand zone, open and close over the 12, shot up to 532, got rejected, came back down, did the same thing. But it keeps bouncing from the same demand zone. I don't like entering demand zones on the 5 minute and lower time frames. Uh, I don't often do that. When I enter the demand zone, I normally enter them on like the 1 hour and higher. If I'm only gonna get in on that first level confirmation, on these smaller time frames, I'm always looking for this setup because I know that I can get in, make $2,000 on this move quick, and then just sell it.
moves like this, you want to be quick because you see how is that where I'm getting out of it. You want to
Yeah,
be, you want to see it. You want to run up. Was that how many points did that run up right there from that gray zone to like?
about $4.
Oh wow,
$4. Yeah, that's a $4 move. That's a lot of money, but see on this confirmation, see, if you get in on a 5 minute time frame, like you want to be out of the trade, man, like within 20 minutes tops. You know what I'm saying? Like if you get in on a 1 minute, you know what I'm saying, you want to be out that trade probably like 5 minutes, stuff like that. You can't get into trades on a 1 minute time frame and think you finna hold that trade with 1 minute time frame confirmations for an hour or something like that. You're gonna lose. Like
that's
you find
valuable information.
yeah, yeah. If you find yourself getting into something on a 1 minute and holding, trying to babysit it for like 30 minutes and stuff like that, you probably gonna lose that trade.
I've held too many trades. That's valuable gold information. I've held trades too long trying to see a bunch of run ups.
It's not that. That's turning it off. And I already quit it and track. Oh shit, I'm on, y'all.
Oh, okay. But yeah, I'm finished up. Well, what I was saying was, Sean, I've babysitted so many trades. 5 minutes, I should be out. That's valuable. 25 minutes, get in and out.
Yeah, but see, your confirmation system gotta support
Yeah,
that
yeah.
because see if you enter wrong. So what you don't want to do in a trade is you don't want to get in the trade on the 1 minute or like the 5 minute, and then you find yourself in that same trade for 30 minutes, and then when it's dropping, you're trying to save that trade by adding more contracts, then adding more contracts, and adding more contracts, right? So when you do that to stuff on like the 1 minute and the 2 minute, what you end up doing is turning a $50 loss or $60 loss into those big giant losses that everybody be embarrassed of. Like you averaging down on a losing trade that you fought the trend on in the first place. Your thesis wasn't right. And so instead of taking a loss, you trying to save the baby. You trying to put more and more and more and more money on something that's about to expire that day. And then you look up and you like, I'm down 80%. I might as well just let it sit. And then next thing you know, you didn't turn a $50 loss into a $750 loss trying to save a trade when you could have just took the $50 loss and looked for a whole brand new trade. And then because see, you gotta think about like this right here. This ain't about diamond hands. The real game that we playing here is called capital preservation. And in this game, only the person that got money can play it. So if you type of person, man, I was down 10%, I panic sold, keep panic selling until you get your confirmation game down. Because what you don't want to be is the person with the big balls that say, man, I'm just gonna let this thing roll and I'm just gonna deposit more money in here next week. And so then you'll look back and you'll have a trading account where you look at the 6-month history or the 12-month history, and you like, damn, how did I lose? How did I lose $55,000? Right. And that's because you're in this cycle to where you waiting on your paycheck to get back in the game. And then you waiting on your paycheck to get back in the game because you haven't understood that you losing real. Like sometimes you can be trading stocks and it don't feel like real money. But just you got to have a mindset like think about a group of people coming in your house and just taking your money from you. Like be that intense with your thought process when you in the market. Don't just sit at the screen like I hope it go back up. Lord, please, Lord. I hope it go back. Use your fingers and sell it. Because it's way easier to recover 30% of your money with 70% of it than it is to take the 20% you let get all the way down when you was defeated and try to recover 80%. You can't do it. So it's easier if you say, all right, damn, I was wrong. Let me pivot. Let me get out of this. Let me chill out. I got 80% of my money with options. Making 20% is easy. Man, trying to turn 80%, trying to turn 20% into 80% is damn near impossible. That's when you find yourself with that 20%. You're trying to get in some lotto contracts. I'm finna get some way out of the money, unrealistic contracts that somebody gonna have to come out here and I don't know what's gonna have to happen, man. Like Elon Musk gonna have to start farting rainbows and giving Teslas out. I need Tesla to go to 260 today and add 195. You know, you can't when you take the loss when it's small, and even if it go up after you take the loss, so what? So what? Because the options, you got to get your entry right, and you got to get your confirmation right, and you got to get your exits right. Okay, you can't play this game and not get your entries right, your exits right. So when you looking at a system for confirmation, like, okay, I got a confirmation. Okay, I got a target. Right. You know how people tell you hear people that and they be training you. They're like, what's your exit strategy? And you be like, man, shit, I'm just gonna let that thing roll, man, because I think this thing finna keep going. Right. That's when you lose money, man. Like when options, it's so easy to make money in options. It's hard to sell at the right time to secure the bag, man. That like everybody be up sometimes in options, man. Like you get in the option, you be like, oh man, you just be chilling, and then the market tank. You like, why the hell? Why did it go down? Well, it hit this resistance right here. Like the reason it went all the way up to 534.50, and you were like, man, I'm up, bro. I'm all this money, and you look, you got 0-day contracts, and literally 1, 2, 3 in 20 minutes, you like, damn, what? How am I down 20%? It hit this resistance right here. It ran straight to it and rejected like it was supposed to, right? So you got to be able to see that stuff and get out. You got to be able to see it. And so it's nothing different between me trading options and you trading options. Like even just looking at my chart now, like this is my brain. This is how I interpret the market. Like right here in front of y'all right now. So you basically could write this out. Like if you really thought about it, you can say, hey, so you know this smart money right here. You know buyers are sitting here. You can say, hey, on the spot chart on the 5-minute time frame, we got buyers sitting between 535 and 529.37. We got heavy resistance sitting at 531. So y'all gotta be cautious here. But if spot break above 531.58, it can shoot up all the way to 532.63, right? And that's a big good area to try to take some profit off the table. And then my max target for the day will be 534.50. Now, I'm not a genius, but I can just see it. You understand what I'm saying? I'm just telling you what I see, just like if I was reading a book from somebody, they wrote a book about charting or something like that. I could sit there and read this book to you. The clearer you can see a chart, the better your decisions and the better your entry and the better your confirmation and the better your exit if you can see. But if you just using a Robinhood chart, you know what I'm saying, then you don't see everything. So you going off the momentum and the hype and that stuff like that. So you don't know when to sell. So, and then if you like Chris Sane chart, he uses the EMAs. They work just like these resistant lines, but they're moving averages, but they stacked on top of each other. So that's why you'll see a candle come up and hit his 48. He got in on a 13. He rolled it up to the 48, and then he took profit at that 48. It mounted to 48. Then he take profit at these other ones. You know what I'm saying? You know what I'm saying? That's his system and that's his confirmations, right? So in order to day trade like a Chris Sane, you gotta understand and ask the question, hey, what is the confirmation you get in on though? You know what I'm saying? So he'll tell you, get in at this price, it's gonna bounce from here and it's gonna go up, right? So you get in from there and you get out what he said. But can you duplicate it and get off of like the can you fish though? Can you do it by yourself? Can you do it without guidance? Because that's the mission. You know what I'm saying? That's the mission that attracted me here. You know, I could sit in the market and just make money by myself, but at the same time, like it's so many people that can feed their family with this if they understand my system. Like you can look at Shon-TheWolf system, and if you can understand it and you can be disciplined enough to wait on the confirmations, then you can make the same bread I'm making because we're looking at the same thing, we're looking at the same confirmations. And you know, it is what it is. I trained a guy in the Discord that worked for Microsoft, right? And he was hitting me up. Hey man, hey bro, hey brother. Uh hey, let's jump on this call. And like he was like, you know, learning stuff and blew my mind. I did a call with him today. He blew my mind. Like he noted it from my experience. He know my confirmation system works, right? He know my mind is set for trading. You know, so I study so much. I only listen to this. When I drive my car, I got an hour drive to work and an hour drive back. I listen to economic news. I can't remember the last time I heard a song. I'll be honest with y'all. Like I don't listen to me. I be listening to economic data and stock stuff and stuff like that. You know, I just, you know, I'm in IT and you know, I do computer work and stuff like that, but you know, I just listen to a lot of stuff. That's what I'm passionate about it. And if I'm not doing that, I'm chilling with my family. So that's why like that side of me is harder for me to duplicate, but I can duplicate this into somebody. I can put my brain into this chart. I can automate Shon-TheWolf Harris into this chart. What y'all looking at is my brain into this chart, and it's like you seeing, you know what I'm saying, through my eyes when you're looking at how I approach the market through this chart right here. But yeah.
Appreciate your help, man. It's DJ.
What's up, bro?
I mean, I'm good, man. Someone asked this question: when you day trade, are you looking for like, I mean, typically for you, are you day trading on what time frame exactly?
At the beginning of the week, I'm on a 1 hour time frame because I know that when I get a confirmation at the beginning of like when it's like Monday, Tuesday, I'm on a 1 hour, right? And so because I want time on the contracts, and then the breakout lasts like once you get the breakout, it'll last the whole trading day, right? So we got puts now, you know what I'm saying? But you look here at this confirmation on this candle, this break, right? So this same confirmation that we see on a 5-minute time frame on the daily, say if it's at the beginning of the week, you know what I'm saying? If I see this happen here, Spies is going to be a put victim on every time frame behind this, you know, for a long time, you know, at least that whole trading day. So if I see this confirmation here, I can enter into puts off of this confirmation here. We got 1, 2, 3, 4, 5, 6, 7, 8 big candles, you know what I'm saying, dropping. Broke support. I'd have been out here though, but we broke support. My strike would have been here. But see, if you look at what's this date, July the 24th, that confirmation happened there. If you go to the 15, and I love trading on the 15 because I love the confirmations because you get good fast moves. But it's still you can use in this confirmation. But like here, we got the confirmation candle here at 523. You know, my take profit would have been, my strike price would have been a 522 put because it's so close. But then it broke through, came down here, hit this next support line, hit the target. We out. That's 523 all the way down to 518. Pretty quick. We have some consolidation here, but it's still drop all the way down to the target. So you can use these time frames to day trade on. Like here, SPY gave us the confirmation candle. If you zoom in here, you see that candle? We open and close over the green trend line and the 12 MA. That's our confirmation. Got in. That said, let me see what day this is. This is August the 8th. Okay, so it got up as high as there. So we got in here at 527. Got a strong push up here. Pushed up here. So that's a $3 move in the same trading day. But you see how it lasted for a good amount of time. I ain't have to. So if I was buying SPY here and I knew I had the 9th, I got the 9th that I can go into. My SPY contract would have expired on the 9th. I'd have got in here. My first, so my strike price would have had to be like a 528 because we got this level right here. We had 527. It had to be in 528 or lower because that's my first resistance level. But I would have had an expiration on these for the next. When I do SPY, if I can, I do the next trading day. Even if I'm on day trade, I do the next trading day. So when it went up here, we gone here, it exploded through, and we never reached the take profit target that day here. And the way the market was moving, bro, I probably would not have held these until the next day. So even if you closing right before the market closed on this day, after that confirmation candle, you would have been out of SPY at 531, 530.62. If you close right before the market closed and held these, trying to wait on that target with your runners or whatever, that's still from 527 all the way up to 530.64, right? So it's still a good move up on the SPY. And so since I did a screener, let me try to look through here. And if y'all got any other questions, just jump in. I'm gonna try to look for some stocks that people talking about.
Shon, how many days do you uh look for, like how many days back do you look at the charts? Do you use like 5 days? Do you use 2 days?
I keep my days down here at the bottom left hand corner on the 1 day, but I look at the day, the week, and the month, basically.
Uh-huh.
That's how I look at it. So for people that buy shares, like say you got a large account and you're just looking to enter into shares, right? What you want to look at, what the most appealing part about a chart like this for you would be the 1 week and the 1 day, right? Because opportunities like this come few far in between, right? So look, Eli Lilly was in scout callouts for the demand zone here, right?
Mm-hmm.
To buy either a leap or shares, right? But look, it came to this. This was in 2018. The same zone is being respected and holding, right?
Mm-hmm.
So no, this was no, that's not 2018. I'm sorry. Mm-hmm. This is what is this?
March 24?
Yeah, March 20. Yeah, this is March 2024 on the 18th. So it came down here. It's been getting bought up in it. So institutions that keep accumulating them in this range. You see that?
Mm-hmm.
They've been respecting the 12 EMA, bouncing off of it, but they've been getting accumulated here. So this is an area, if you have on your chart, like when you're doing chart work, this is how I do chart work for shares. I just come to it, Eli Lilly, especially when it's bears like this. I already got my alert. You see how my alert is already on this chart?
Mm-hmm.
So when it triggered this alert, it sends me a text message, and then I would just look for Eli Lilly to come down to demand, pick up a couple of shares right down here, since I know this is where they're buying their shares at. I pick up a couple of shares, but on them, I didn't get any kind of leap contracts on them because they were so expensive before earnings, and I waited too long to get them, and they waited too long to get down to this demand zone. So I was only able to pick up a few shares on it. I think only 2 shares I got on them. But this is how you use it for shares. You right click above it, a demand zone, add an alert every time, and then you done with that. So then you go to like when Amazon dropping right now. You see how they dropping down? Amazon has a decent support right here. You can put a alert on there so when they get down to that level, if they ever get down there.
And you put in those support lines yourself? Those are your lines?
No, I customize an indicator to do it. So it just looks back over the stock's history for the past 400 trading days, and it puts it on every stock. Like for every stock, I can see the support, previous high and previous lows for the past 400 trading days on them.
Mm-hmm.
So that way I could, see what they're doing, see what the stocks are doing.
Shon, can I ask a question?
Sure.
You can hear me?
Yeah, I can hear you.
Yeah. All right. So a few moments ago, and I just want to say in advance, thank you for all this because it's my first meeting with you, and I'm like, damn, I should have been joining in. But my question, real quick, is so homeboy in the Discord, he wants to start like a small account challenge, and they were like just buy shares. So it was like on a larger account, you could use this method. What about on a smaller account where like options, I'll buy one, and I'm really feeling confident, I'll buy two, but for the most part, I like to buy one because I know whatever I'm buying, I could possibly lose. But when it comes to stocks with your setup, right? Could I do the same thing? Like if I see the buy zone, I could just buy, how much I can afford, and then I could ride it up and I could sell it like that. You mentioned a larger account, but what about like on a smaller account? Like
No, the stock buys you can buy, but I read Mario challenge. I think in his challenge, he wants you guys to look for only stocks that's in the up. I'm saying for this challenge specifically, he wants y'all to look for stocks that are in a uptrend.
Uptrend.
Yeah.
Yeah, like how you showed us on a screener, right? So
yes,
I
right.
use your method. Yeah.
Yeah. So if you use that screener, you got to sort out everything that's in the uptrend, basically. So right. if I really want to see stuff that's in like an uptrend for sure, I will go to the so let's go to like the 1 day, and I say what a 12 EMA is 3% below the price of the stock. So if I sort for something like that, so now it's just gonna give me nothing but the ones that's running. Like these ain't nothing but runners, like straight up, they going up, ain't nothing to talk about because now the 12 EMA is so far under them on the 1 day. So it's giving me Eli Lilly, whoever NVO is. I haven't traded them before, but if I screen for a stock like this, you know what I'm saying? If I look at day 15 minute, these stocks are running. These just runners. Like these are stocks with, they popping out. So you see how these stocks charts look? You see that?
Right.
These stocks are turned around. So if you're looking for just straight runners, you would screen for a more aggressive. You see how the 12 EMA is so far beneath them now?
Right.
So they can start putting, but he might look for stocks that's over the 200 day as well. So if I want to look for stocks that may be back above the 200 EMA, so I'll go to the week, look for that same screen again and see. So now they're giving me Johnson and Johnson and Avi and Coca-Cola and all these companies. So now if I look at this list and I just click on T-Mobile, so now I got stocks that's really in a straight uptrend running. These stocks right here, everything on this list, I could close my eyes right now and buy shares on the way they're in the uptrend and just wait for them to come back, tap the 12 EMA, pop back off. But see, you want to evaluate, what is the stock doing? How's it interacting with my EMA, right? So you looking and look at this. I'm on a 1 week. I'm seeing it's tapping my 12. I go to the 1 day. It's Costco. It's breaking back above the 12 here, but we all these stocks qualify for an uptrend because they over the 200. You see that? They all over.
But right now, looking at your chart, right? Wouldn't it be but you just got off for the other one? It's so far away from the buy zone. Wouldn't it be expensive in a sense?
No. So you don't. So these buy zones. You see how this buy zone is way down here?
Yeah.
Stocks can only reach that buy zone when they selling off.
Oh, when the big dogs. Oh, okay.
You see, when they come down here, so you got to think about the mindset of like a Wall Street. Do they want Microsoft at 500 or do they want them at 380? They want Microsoft when they at $380. That's when they buy them, and then they let it run up, and they let us buy the top. They want us buying it at 400 and something. Like they gonna let it plummet.
Right. They got it on the low, and they like, all right, we want y'all to buy it, buy it up, and then when it drop,
That's
they out.
exactly what they do. That's exactly what they do. So that's why when I say these demand zones are important for share accumulation, when a stock come down here, see what we're trained to do is, and which is still good. We dollar cost average. You know what I'm saying? Like I'm gonna buy this thing every day. I'm gonna buy this thing every week, and it's cool. It's good to do that, but it's also good to lump sum buy it every day. But then when you hit a demand zone, buy it more aggressive because you know that you're putting your money in with them. So you can still buy stuff every day by in increments, but you also, when something like Microsoft or these large cap companies do stuff like this, right? And they come back down here out of nowhere and come down here and pop right back out. Who you think bought them back? Why you think they popped from here? It wasn't retail investors buying shares. We scared to buy shares down here because they go against our nature. It's like they dropping. We're not but they bought them up right here. That's why they coming right back out of there, and they're gonna try to recapture the trend and go up. But
how do you know it won't drop all the way down to 370, for example? Like that's another green area,
yeah, you don't know, but the exits. So this is my exit strategy with demand zones. So I'm going to buy my shares here, right? I'm gonna buy some shares in this zone, right? But if on a daily time frame, if I bought them on a daily time frame, if a daily candle on Microsoft, this is the candle that created this zone right here. This candle, right? This green candle, we tracking this red candle. If you look at the top of my chart right here, so if Microsoft, the low for this candle is 389.17. So for me to get to abort this zone, Wall Street will have to abort this zone first. So if Microsoft came down here and they closed the daily candle, I don't care if it was 1 penny. If they close the daily candle, they got a support area right here too. But if they close under this range, close a day under 389 or whatever this range is right here, 389.17. If they close a daily candle under here, this zone is going to delete off the chart automatically because it's invalidated now. That means all the buy orders have filled and Wall Street has abandoned their position here. So then I'm going to abandon my position here as well. And I'm going to wait for this zone since it's never been tested. You see?
Hey, Sean.
So then I'll average back in here.
Hey, Sean. Because, what you just said about the invalidation, right? Is that because of all of the computer algorithms they have set to buy at that zone, and because it didn't come in and buy?
No, it's not. So what happens here is when smart money buys, they put in limit orders to buy in a certain price range. Okay. So say if this was a $1 billion buy or whatever or more, say if this was $500 billion they were buying and they bought in April, say they came in and it's the price they wanted Microsoft at. Well, once that $500 billion order they put it in, it starts triggering all this other stuff where they buy over the counter and whatever. But once Microsoft gets out of this price range, that some of the leftover order is still just sitting here. So say out of a $500 billion order, 300 billion filled up and shot Microsoft all the way up to this 467 range. Because after it bounced from here, it just kept going, right? So when it comes back down to here, it starts just re-triggering these buy orders that's been sitting here since April. So they got lump sum. They bought a lump sum Microsoft here, and the rest of it just got filled. Like a lot of it just got filled up again. So that's why I come down here. Buy orders start re-triggering, putting buy pressure back on Microsoft, and they popped out.
And so if that 500 is, let's say, it's up, that's when you get the price breaking below.
That's exactly right.
Okay.
So if Microsoft come down here and they just keep sitting in this range and keep sitting in this range and they pop out, come back down, eventually it's going to fill all the orders and then we'll lose it. And then it'll drop on down to the next one. But on the first retest, it's like if I was really in my bag on this week and was paying attention to Microsoft, I ain't even got no alert on here because I wasn't even expecting Microsoft to come anywhere near this demand zone, and like they never come back. Look at their chart, where they barely ever come back to a demand zone. Like, so this is like super rare. And then on top of that, that drop on Monday was so aggressive that I was like, man, bro, like this is like when the VIX went up 100%. Like I was like, yeah, I didn't even want to put nothing like this inside of Discord for y'all to even take advantage of nothing like this, because I was like, man, the market just tanking so hard that it just made me even gun shy. But on a normal day, if it wasn't something like how it was the VIX spiking 100%, like I'd have bought this up, you know what I'm saying, and being up right now in my call. I'd have been having my pre-earnings call for Microsoft. Now I got Meta, Meta came down there, try to play in that range, and I bought a January 2025 contract on them, but because they came down here, popped and went real quick. But I like their earnings more than Microsoft. So Meta did so good on their earnings that, you know what I'm saying, I feel like they were the strongest out of all big tech. So I went ahead and got them. So I got earnings calls on Meta when they came down here, and they're up a lot. And I got I'm working on Nvidia. I got 2026 contracts on Nvidia. But they still drop. I don't know if they need to turn around, but they looking kind of, they looking kind of bad. I don't know about them.
Shon, why are you buying so far out your
Come on.
contracts, the 2026?
For Nvidia?
Uh-huh.
Well, I bought the 2026 because I don't know if after this earnings with Nvidia, I don't know if they'll ever come back down to the 90s and stuff like that again if they beat. But I got those contracts because I'm gonna try to get 10 of them, and I'm doing that so I can just exercise the contracts. So they have like an aggressive push up. I'm gonna exercise some of the contracts and then sell some of them.
So you will sell before expiration, but you just bought that far out to give you time, to buy you time?
To give me time and protection, because the market was dropping so aggressive. So I didn't want to be in them, with too close of an expiration date. And also they dropped down to like $2,500 a piece. They were just like $3,500 last week. I mean, the week before last. I'm like, these contracts are moving extremely well. So I can imagine, like, if Nvidia gets back to 116, 120, or even 130, even though they're out that far, they're moving like those contracts are moving like they expire in November. Like but they got so much time on them. So since they're moving so good, like they were just at $3,500, and I put them on my watch list, and then I looked at them after that drop, and they was like at $2,500 a piece. I'm like, man, that's crazy for January 2026 contracts. So right. I just grabbed that.
Mm-hmm. And that black line that you have on your charts, is that VWAP?
What black line? This black line?
Yeah.
The 200.
That's the 200.
Oh, that's the 200 moving average? Okay.
Yeah, I'll show you my VWAP. My VWAP is the anchored VWAP.
And do you follow that closely or no?
Yeah, I do on the smaller time frames.
Uh-huh. Okay.
I do on the smaller time frames. Let's see. Yep. Let me see.
And one of my questions was I don't use TradingView. I use Stocks to Trade. That's the name of the platform. And the reason why I stay with this because they have breaking news. They let me know whenever. I mean, they are so quick to find out what's going on in the market. Mm-hmm. But I like, everyone seems to be using TradingView, and that smart, these green sections that you have that you're calling the smart money. Mm-hmm. Is that a standard on the TradingView platform?
No, that's just a part of my chart. So this is what we call the wolf chart, but this is just I put all these indicators together to kind of answer the questions of like entry price and when like confirmation, like, and then to actually see like your take profits and stuff.
Well, how do you know? So is that a setting that you turn on? That's what I'm trying to understand. Like,
no, these are indicators. Like it's indicator. Well, they're customized, but they're indicators for the chart. Yeah,
okay, but that's something that you could do on TradingView.
That's right.
Okay, got it. Thank you.
Yeah.
But Shon, question, like a piggyback from that. If someone wants to set up this chart, is it only TradingView, or could we set this chart up on, let's say, like Webull? Could we set this up?
No, so when I be doing the one-on-one sessions, I do it and say go to get the trading view. I know some people trade on different platforms like Webull. I got to see what indicators Webull has. I know that TradingView has these indicators, and that's what I use. So when I do the one-on-one sessions to do the chart setup and show you all how to trade it, that's why I say go get the TradingView platform because of the large amount of indicators, it's almost like how you have Android developers like on TradingView, they have so many custom indicators, and all the indicators that I use, I go in and modify all the settings in them to fit my vision on what I think they should be, right? Like even like these black lines on my chart, the indicator look like if you just go put an indicator on the chart, it looks nothing like that. It looks like a lot of big blue zones everywhere. It looks nothing like that, but I just customize them and so they could make sense with the chart. You know what I'm saying? As far as taking profit, you know what I'm saying? Like we use these just to take profit, and then you can also use them for break retests. If you know about breaking and retesting support levels, you use them for break retests as well. Like I'm an example of a break retest is like this. You see how this stock broke above that level and then came back down here and retested it and broke back up and went higher. You
So
use
you
those.
could use that with the fib retrace.
Yeah, you can. Yeah, yeah, they should line up with the field retrace for the most
Okay.
part.
And then last thing I was gonna ask you about, you said something about when you were talking about like the Lily play, like exercising it and or another stock where it would go down, you would do something like that where you would exercise it. And I know the lady just before she was talking about you would take profit before it expired. But for someone that's never actually exercised, like how does that work? Is it that now let's say you did a put and then you ran it down, you made that money and you decide to exercise it instead of just selling it. Do you just buy it at that discount? Do you take the profit? How does that work for those shares that
Yeah,
you get?
it depends on how much Saying sometimes you got to have money on the sideline, but your contracts go up a lot to where it covers the shares. Then it should balance out. Like if you got like leaps and it goes up a lot, you might not be able to exercise every last one of them. Like, but you should be able to sell, put a lot of cash back on the sideline and exercise one or two of them with the profit from the contract. And if you lower than what 100 shares cost at that price point, the $99, like I got the $99 call,
Yeah.
and so I'm gonna build that one out. But I'm only planning on trying to exercise two of them. I'm trying to get to 10 if they drop some more. If they don't drop no more, then I may not get to 10.
So you would basically, all right, let's say it dropped. You would like let's say you got 10 shares. Let's say you sell off like five. The other five, you would put that in the back row, but the other five you would roll that over, you exercise it. And then if there's something on the back row that you got to put on there just because of the contract, you would just take like that, and then you would just roll that contract into a leap.
You will see. I'm buying the leaps right out.
Okay, okay.
So what I was doing with the puts, I was buying puts on Nvidia.
Mhm.
So I was spending like $1,500 every time. I spent $1,500, and then I get up like 100%, 150%.
Mhm.
Then I get a leap contract. I take that profit,
Okay.
spend $2,500, $2,700 on the leap with the put profit, and then that's how I've been bidding. So while they dropping, I just buy puts, and then I take that profit and buy a leap contract at these demand zones on the smaller time frame. So when they drop down to a demand zone, I sell my put and then buy the leap.
And then you would just exercise the little runners at the end.
Yeah, that's right. Yeah. So let's see. And so I'm gonna give me like we're gonna be on for like 15 more minutes, and then I'm finna look at some of these stocks that's listed right quick. I heard somebody who's at contact.
Yeah.
I can't hear you. essential package. No, but copy that message into the Discord if I can read it, because your volume's super low. I can't hardly hear the question. But you said they want you to validate whether you're a professional trader or not.
Yeah.
Okay. Yeah. So send me that message in Discord, and we can look into it. Okay. So let's see. Okay. I'm gonna start from the bottom and go. Well, let me start from the top and go down. Ooh. Hey, if you posted one in there, just resend it so I can see it at the bottom stock. Okay, so IWM it's trying to break up, but it's probably going to consolidate between this range. It got a confirmation that they want to try to break out, but you see how close their resistance level is at 207. So if it pop up on Monday, it's gonna have some issues at 207.40. From here, your buyers are sitting right here, down here. If it drops beneath 201.50, it's gonna come down here. You got a lot of buyers sitting here. This would be a range where you want to get a call here, and with a strike price under 201, only because we got CPI and PPI coming out Tuesday and Wednesday. I don't know if everybody was aware of that, but the big inflation data come out Tuesday and Wednesday. You got PPI, and you got the consumer pricing index, which is the CPI that comes out on a Wednesday morning. So you get your calls here. They're gonna try to run toward it on Monday. We will know if they expect inflation to drop or go up, because when they put the economic calendar out there, they're going to put the analyst expectation. And if they're expecting it to come down lower, it'd be a good idea to at least get one call down here if it comes down in this range. If they drop under $200, you need to get at least one call. Well, I ain't gonna tell you need to get one, but you know what I'm saying? I'm gonna give me a call down here with a strike under 202 or 201 down in this range. But it's gonna probably have trouble getting over 207. If it break above that level, the A plus trade for them is, if you look at this chart on a 1 hour time frame, right? You see how when there's nothing here between this 210 and 220. It's like literally nothing here. Okay. So just like over here, it's nothing there. It's an old trade. Look, there's nothing that they've been rejecting at that level forever, right? So when they break back above it, they expect a run. Okay, it's not gonna be it's nothing here to stop them. I'm just gonna put that out there. So if they CPI come in super good and the economy data is still good, and we're not looking like a recession, it's going to explode through this range once it conquers this support level. I mean, this resistance level at 209 area is gonna shoot up quick, right? Just like over here, when they lost that level, it didn't take no time for it to drop $10 quickly down here. So it's going to be doing the same thing, but it got it's choppy right here. It's not worth buying in this range, because if you look at it, this is nothing but chop. Nothing. This is right here is a scalper's paradise. If you scalp, this is your game. You got this 207 to 205 ping pong type action. You got the 205 to 203 little move. You got these little moves for people that like be in and out on a 1 minute, 2 minute time frame. But for people that want to wait on it to close a candle above 210.25 on a 1 hour time frame, once it starts getting above that, it's gonna come up first, test 213, because the 200-day moving average is here. But if it gets above that, it's an easy path back up to 220 if it gets above that. see Carnival. So Carnival just grabbed back the 12 EMA. It bounced out of a buy zone here. It's kind of look real similar to IWM though, but it bounced out the demand zone here on a daily time frame. Uh-oh.
You hear me, Sean?
Yeah, what you say?
Can you hear me?
I can hear you now, yeah.
Oh, finally. Thank you. Hey, first of all, thank you for this. For us new guys, this is amazing. Thank you very much.
No
Quick
problem.
question. On your chart here, I know this is your mind. Is this something you're going to be like selling in Pine Editor, put into Trade View, or I mean,
Oh
this is
no, I just what I do is I do a one-on-one session. My one-on-one session is $50. And I'm gonna be honest with you. If anybody know what they're looking at, they understand. Like for me to be giving this to somebody for $50 is kind of crazy. But
unbelievable.
So the one-on-one session comes with this chart set up and me teaching you how to look for the confirmations and everything. But when we do the one-on-one session, this setup only take about 15 minutes of the call, and then for the other 30 minutes, I'm drilling down on how you look at this chart and how you get the confirmation, how you play the levels and stuff. And so
perfect.
If you go to my Discord profile and just click on it, the link to set up the one-on-ones is in there, and then all you need is TradingView with at least Essential, and then I can set this up for you.
Yeah, I was looking at your calendar. I'll be gone for the next 2 weeks on vacation. As soon as I get back, your calendar has been closed the time that I'm gone. But anyhow, I'll set up booking. Thank you very much.
Oh, no problem. All right. So with Carnival, we sitting in the buy zone. This is an old buy zone. It's been here since November 2021. Right. So ever since November 2023, I'm sorry, November 2023, every time it's come down this range since that time, it's been coming bouncing. They've been accumulating it here. So it came back up, ran up to and you see like it's kind of, if you look at this chart, you got the sell zone here. It's been up there since 2022. It's constantly going up, tapping it, dropping it, come to the demand zone, going up, tapping that same story, right? They playing the same range, rinsing and repeating, because now that you can see what they're rinsing and repeating, you can rinse and repeat with them. All Carnival has to do is avoid dropping and losing this zone. If they lose this zone, it had to be something bad, like another disease or something, because like they literally would drop all the way down to $9. So they've been playing in this range, but smart money has been pushing them up here, selling them, buying them back here, pushing them up to these resistance lines, buying them here, buying them, and they keep buying them here and selling them when they get up. So what you have to do is, if you bought them down here, you have to trim out as you hit these take profit targets, and especially you got to be out of it altogether here, up here.
I don't know nothing.
Who was that? It's Ashley.
Oh, my bad. I'm at work. Sorry, let me put it back on mute.
All right. So CrowdStrike came close to coming to this out. They have a demand zone here. They had one here. They lost it. They still bounced. They have heavy support here. So if they ever come down to 170 to 179, this is where the money is sitting there for sure. Now this is a heavy resistance and support level they've been bouncing from since 2021. Coming here, tested that level. Our chart pulled it on here. It rejected here. When they finally got above this, they broke above it and retested and exploded up into this wide range. The reason they've been dropping so easy because they never really established too much support levels here. So that's why they're dropping so easy here. So they might test the 12 EMA. If they don't get back above the 12 EMA, they still gonna probably reject and drop down to here. But this is the best buy zone. If they get back above the 12 EMA and get back above this support around here 280, they have a better, chance of recovering. Right now, they're still under the 200 and they're dropping like toward this demand zone here because they lost their their other one. Let me see what they look like on a week though. Yeah, so they're trying to get back up here and reclaim the weekly 200. They never lost it really. They came down and tested it on a 1 week. So yeah, if they can hold the 1 week and not lose it, that'd be very positive for them. If they do push back up though, they're gonna hit these fair value gaps probably at the bottom of like 284 to 326 if they ever do get some momentum to come back up. Let's see, we got 5 more minutes. Let's see, Cisco. All right, we're looking at Cisco on a 1 week. Yeah, they're under the 200, so they're still in the bear trend on a weekly. Very close to a demand zone on the daily down here. This demand zone came from, and it looks like if you look at the moving average, like they're coming out of a humongous head and shoulder pattern. Let's see. So
Yeah, they had some bad news. They're laying off people last week. So that's why I bought some puts on them, but they expire in a couple weeks.
Okay, yeah. So right now they're just making a bear flag into this support right here. So if they stay under that level, they're just gonna reject down. And your exit though, you need to be out of there when they get close to between 44.14 and 43.44. That'll be you get out of those around that price because they had this demand zone from November 2022. This is gonna literally be the first time they've ever come back down to it. So this would be the ideal area to start trimming your
Shon,
puts. Mm-hmm.
I'm looking at Disney. What do you think of it? They beat earning, but they keep dropping.
They come here between $81 and $78. This is where they want to buy them at. They bought them aggressively from here in October 2023.
So should I put the alert at 83?
At between $81 and $78 is where they're buying them at. Let me look at their weekly chart though. So the 1 week chart, yeah, it's the same little range. They got a range here from $83 to 76, but within this, they got a support level right here too that they bounced off of. So I think between this little range right here, like you said, around like 83, between 83 and 79 is where they probably would get bought up at. And they just recently did that. They came down just not as aggressive, but pretty aggressive here. And they came right down to this zone. But this zone is super old, man. This zone been on here since 2014. So
they might lose it.
No, I don't think they're gonna lose that. Because look, they've been bouncing off this zone. They came here, skyrocketed off, came here, bounced out. So this is a pretty heavy zone. I think the only way they lose that zone if they something like very bad has to happen.
Okay.
Yeah. So that's the range they're in. All right.
Is there a way you can go back over your the screener setup, the stock screener setup?
I recorded. I'm recording this video, so I'm gonna put this video inside of the Scout callouts, and you all can download it.
Okay, great.
Yeah. I normally don't do that because I get a kick out of people missing it. Then I'd be like, no, I don't have a recording. But I went ahead. I went ahead and did it this time since I think somebody asked me specifically. I think it was Tam. Matter of fact, let's see. So Super Micro, they dropping down to yeah. So they might stop at this fair value gap at 411 to 383. Man, that chart looks pretty bad. They don't have anything here to catch them on a weekly. Let's see, look at the daily. Maybe there's more hope. Nope. They're dropping, making these bearish fair value gaps, and they're gonna push up, touch it, and then drop some more. They literally want to come down to like 330, but they have a fair value gap here. So these things always get filled. They got a 98% fill rating. It looks like they're finally coming down to fill this one. So when they get to this range under $400, they're not going to break too far through. Look at this is a lot of support. Like it's like support lines on top of support lines and demand zone stacked on top of demand zone. So this is like I ain't gonna say guaranteed, but they're definitely not breaking through this easy.
And they got a 10-to-1 split at the end of September.
Yeah, so that when if they ever come down to this low, around like 320 something, 330 something, this is where they're going to get accumulated aggressively. Yeah. And this is an area where I would buy earnings contracts. See that earnings date. So this is where I would be getting like September contract, October, November, September, October, November contract. All right, so it's 4:15. I'm gonna wrap it up, and if y'all got any questions, anything, reach out to me in the Discord, and I'll try to put some plays inside the Discord that I see upcoming, and and even looking at, NVIDIA got strong, heavy resistance right here at this support line at 97. They wicked through it and touched this demand zone. They barely touched it. And they shot back out of there. They got bought right back up as soon as they touched this green zone. This is where I bought it. And it's bouncing. It broke above, retested, shot up again. Still needs to get back over the 12 EMA here to kind of reverse this trend, similar to this right here. So falling right here. It finally got back above the 12 on this candle, and you see after they got back above the 12, open and close without touching it, they start reversing up. So that's what we need out of NVIDIA. And any other stock picks y'all got? I see you, Danny.
Hey, Sean, quick question. You do this every Saturday or every weekend?
I'm gonna start trying to.
Appreciate it, man. No, this means a lot. I mean, you have no idea how much people are learning here. But blessings to you, G. Thank you.
No problem, bro.
Thank you so much, Sean. God bless you, brother. Seriously.
All right, bro. I'll see y'all in Discord, man. I appreciate everybody. And
I appreciate you.
Yeah, Danny, send me a message. All right.
Thank you, Sean.